Southeast Radio's Business Matters with Karl Fitzpatrick.
My first guest is Pat McCann, the CEO of the Dalata Hotel Group. Pat, the group recently posted annual revenue figures of €290 million. Perhaps you can start by providing us with an overview of the group's hotel portfolio as it stands today, please.
Okay, well, as it currently stands, we have 41 hotels. And out of that 41 hotels, we own 24 of them. We have long-term leases on 10 of them. And then the balance 7 hotels are under short-term management contracts. And as we move forward, that will change somewhat in that we will have more ownership and more long-term leases as opposed to management contracts.
You established the group just as the property meltdown was beginning in Ireland. In a way, do you think that the recession was kind to you, enabling the group to negotiate good deals and slowly build the empire which you have today?
I suppose, hindsight is wonderful. And the way we set the business up, which is actually 10 years old this year, meant that we were pretty lowly geared. And we deliberately set about to do that. So in terms of debt, I wasn't that exposed to debt at that point in time. And as we got into 2009, what happened, I suppose, was again fortuitous. And we were able to see an opportunity where banks were appointing receivers over hotels and they needed a management solution. So that gave us an opportunity to provide services. And I know it wasn't the most popular thing to do in the hotel business in Ireland, where people felt we were dancing on somebody's grave. But essentially, if we hadn't done it, somebody else would. But we took in total 37 hotels from banks and receivers, which we managed for a period of years.
And when it came to negotiating to purchase those hotels, what was your particular strategy around that?
Well, I suppose we recognised that what would happen kind of from, and we saw the market changing in around 2011, 2012. We knew that the banks would start to sell hotels. So for us, the opportunity arose when we were able to go out to the market and float the company and raise. We raised about 800 million in total, and we floated the company in March of 2014. And we had earmarked certain properties that we were managing, but quite a lot of them that we weren't managing as potential targets. And I suppose we were very successful in acquiring those assets at prices, I suppose, that nowadays looks pretty cheap. And we were in a great place because we had the cash and we had the resources to do that. So it meant that we didn't have to go out and I suppose, beg or borrow or steal the money. We had it already in position, which meant that when we went for a deal, those selling knew that we had the cash resources, and that made a big difference for us.
And had you much competition in terms of buying those hotels at the time? Was there many other operators in a position to bid for them also?
Yeah, it's interesting that you say that, because when we looked at particular hotel assets, and if the hotel was valued at below 10 million, we had very little success in that because you had a lot of smaller private buyers buying in that space. And we simply couldn't pay some of the prices that were being looked at in that. In the level above 50 million, there was also a lot of bidders in for, because you had the private equity guys came in at that point in time. So the bigger guys were interested in that. In the sweet spot for us was between the 10 and the kind of the 40, 50 million. And that's where we had most success, because there was a very limited pool of buyers in that space.
And when you were considering hotel purchases, of course, you had the advantage of managing a lot of these hotels, so you could see how they were actually performing at the time. What other criteria did you have when considering these purchases?
I suppose, and it's a very good question. One thing in Ireland that you have to remember about is that we have a very young hotel stock. And that's very important, because if you're buying an older hotel, what we call your maintenance capex bill can be very high. And therefore, if you're buying a relatively young hotel or new hotel, it means that your maintenance capex is relatively low. So that was one of the criteria. So when we look at our portfolio of hotels now, the vast majority of them were built post-95, which means that we have a very young hotel stock, relatively speaking. And it means then that our maintenance capex, we spend about, in 2016, we spent about 12 million on refurbishments. And we'll spend that every year. If we had bought older hotels, that could be 15, 16 million or even more. And therefore, we're getting greater bang for our bucks by having a very young portfolio.
And how would you describe your experience of dealing with receivers in such purchases?
To be honest with you, I suppose because, Ireland is a village, as we would describe it. So I would have known a lot of these guys very well in terms of the way they behave and their requirements, of course. And they had to do a good job for their clients, which was at the banks and the original owners of the properties as well. They had a responsibility. So we were very aware of that. So we knew what would work for them and what wouldn't. And therefore we geared our position very clearly to make sure that the receivers were maximising their position with us and therefore maximising it for the original borrower, which they have a clear responsibility to. And therefore that worked extraordinarily well for us.
Now, at the present time, the Dalata Hotel Group owns 31 hotels in the Republic, with a further 9 hotels operating in Northern Ireland and the UK. With more than 75% of your business being concentrated in one market, are you concerned currently that perhaps you might have all of your eggs into one basket?
Not particularly, to be quite honest, because we're well dispersed within that, and we're in what we call the key urban areas. If we were in very strong leisure destinations where it's the most vulnerable, then I'd be more concerned. But the fact is that we're very well spread in terms of both corporate, very strong corporate in Dublin, Cork, Limerick and Galway. So we're very comfortable around that, and that it tends to be almost recession-proof. So I'm comfortable there. Our further expansion now is going to be in the UK and growing that 25% currently up to probably closer to 40 or 50% at some point in the future.
And staying with the UK market, at the start of the year it was reported that the group could replicate the deal with the German investor group DECA to gain more prominence within the UK hospitality market. Remind us about the Burlington Hotel deal and if it's likely to be repeated for future UK deals.
It is indeed, and I mean it was I suppose a landmark deal for us. In fact, getting the Burlington, which I ran for 8 years, back into the fold. And we're delighted because obviously it's a very large 500-bedroom property. And the deal we simply did was that we wouldn't have had the cash resources at the time to buy it, but a company called DECA Bank out of Germany, it's one of the biggest banks in Germany, they were looking for what we call yield. And therefore, when they looked at buying it, they came to us and said, would we offer them a 25-year lease? And that's exactly what happened. So we will be in what's now the Clayton Burlington Road for the next 25 years under a lease agreement with DECA Bank. And as a result of that, they said, look, we would love to do something with you in the UK. And we're already in the process of looking, and in fact, some of our team are actually in the UK in these coming weeks, looking at opportunities. But they won't do new builds with us. So we are talking to other partners of a similar nature to help fund new builds for us, where they will build and own the property and lease it to us on a deal similar to what we have with DECA.
Well, if you've just tuned in, I'm speaking to the Chief Executive of the Dalata Group, Pat McCann. Pat, the sharing economy has grown exponentially in recent years, and no sector has witnessed this change more than the hospitality sector, where the Airbnb model has flourished. How much of a threat does Airbnb pose to the traditional hospitality offering?
I suppose, when Airbnb started, it was definitely what we would call the sharing economy, where somebody would rent a room in their house. Unfortunately, I suppose, like all of these things, it's taken on a life of its own. And now you have almost commercial enterprises running Airbnb. You have, in the States, you have a whole block of apartments that are being taken over and run as Airbnb. What will happen, and what's already we're seeing a lot of it happening, is legislation is going to curb some of this activity, because obviously the big loser in this is the general exchequer, where they're losing out on tax revenues and things like that. So that certainly will slow that somewhat. But we always call these things disruptors, and what they do is they disrupt our normal business model. But what we see from our perspective, and from the Dalata's perspective, we see very little traction in Dublin, because, and I know people will smile when they hear me saying this, but our hotel room rates are simply too low. When we look at London, it's a very different game, and Airbnb has had far stronger foothold. And that's fairly common across both Europe and the US, where you see cities with strong hotel room rates where Airbnb has a lot more traction, whereas in cities where they don't have high hotel room rates, they have far less traction. So it's the fact is it's driven by the strength of the underlying hotel market, that allows Airbnb to latch onto that. But you'll see challenges coming to Airbnb, like all, you see it in Uber as well on the taxi side, where they're being challenged by a lot of the, I suppose, regulatory bodies looking at the way they do their business. So there's going to be challenges for them. That doesn't mean that they won't survive and survive strongly, because they will. But it'll be in a very different guise, and it'll be on a much more equal footing. And
from an occupancy perspective, do you feel that Irish hotels in general have become over-reliant on booking sites such as Booking.com and Trivago?
Again, when I look at Dalata, like essentially about 22% of our total business comes through third parties, which is relatively low. And yet we will use them, and we have a good relationship with them because these are our partners. And this notion that we can do without these third parties is simply not true, because they will reach parts where we will never have a marketing reach, and therefore we find them very useful to cover markets where we can't afford to go to. So it's about working with them. And making sure that they're delivering for you when you want them to deliver, and then that you're closing them out when you don't need them to deliver.
So if such a small amount of your bookings are coming through those channels, where's the main source of bookings for the hotels?
Essentially, when you look at the makeup of Dalata, because we are essentially in urban areas. So if I look at where the bulk of our business comes through, the single biggest market for us is the corporate market. And that could be 45% of our market. And then you have the tour operator business, which is about 12 to 15% of our business. And then you have event-driven business like sporting events, concerts, all of that will drive the rest. And then you have what we call transient leisure, which comes through mainly through our own website, but also through the OTAs will make up the balance. So it's corporate is the key leader for us, and that's where a lot of our focus is.
And Pat, I want to focus on Brexit for a second. Have you noticed any decrease in bookings from UK tourists to date? And do you see that as any potential threat to your business going forward?
I suppose I'd love to say to you we understand exactly what's going to happen with Brexit. We have no idea, like most other people. To date, we have seen little, if nothing, changing in relation to Brexit. We still have a very strong UK business which has performed very well. That's business coming from the UK into Ireland, and obviously we have a strong presence with 25% of our business in the UK. That actually has outperformed our own expectations in the last 6 months, so we don't see any issue around that. But I suppose the uncertainty is what drives us all mad, that we simply don't know what the final outcome or what kind of a deal will be done.
And Pat, finally, the Irish economy is enjoying a period where unemployment figures are steadily falling. But will this pose any particular problems for the hotel sector in terms of recruiting new staff and holding on to existing staff?
It will, of course. And I mean, we compete, while people think it's all about the hospitality, like we compete with many other sectors for employees, whether it's retail or construction or whatever. And it will always be challenging for us in terms of the business that we have in recruiting. But what we do in Dalata to overcome this, we actually train and develop our own people. So, for example, when we open our 5 new hotels in 2018, all of the teams that will open those are internal in Dalata today. So we have grown our people. So we will be less affected.
Southeast Radio's Business Matters with Karl Fitzpatrick.